Could stock market insiders be selling up their positions? In today's video, we explore the latest data and why this tweezer pattern may have more impact than you think to markets as they hit correlation levels. Whether it's semiconductors, Tesla, or even NVIDIA as a stock, everything's hit what we call a call wall. And in today's video, we need to talk about the options flows and what we expect to happen next. VIX is spiking, geopolitical tensions are rising, and at the time of this recording, it looks like there's a lot of pizza orders going through. What exactly is about to happen? Well, we're looking at everything from stocks to commodities to cryptos to break it all down right now together. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, we'll be covering the latest macro, the big data, and of course the key flows, including a couple of large dark pools that came through over the last 24 hours. Let's kick things off though with insiders. It looks like as of the latest data that we have so far, insiders have been selling at record levels. And we've just not had this before when it comes to this total size, even since 2005, 2006 period. And you'll notice that while it doesn't necessarily coincide with the absolute highs of markets, what it can do is show the beginning of the final run. And this makes us think, well, maybe we need to be a little bit more patient, a little bit more clear-headed when it comes to picking our stocks over the next 6, 12, and even 18 months. As we already know, social media, according to the latest Goldman Sachs report, is absolutely flatlining at the top here in the roof. And that basically means that there are no bears in terms of general sentiment out there when it comes to social media. Could this cause at least a little bit of a panic sell that Wall Street starts to pick up on again? Well, it certainly could. And we've already looked at the fact that institutional buyers have started to pick up their positions a little bit recently, but they're still behind. And as we know, Wall Street hates to be behind because when they underperform, they don't get bonuses. So what do they like to do? They like to push the stocks around so that they can buy that dip on the better prices. We do know that retail went all in on this bid. It was one of the most aggressive buys we've ever seen from retail, as we've been conditioned that way. And recently, a few retail traders have started to sell off. So if we do get a little bit more of a sell-off, it will probably create an extreme amount of fear. And I would say retail will absolutely start selling the bags across the board. What have you guys done though? Have you started selling already? Are you ahead of the curve? Or are you just saying, you know what, I'm going to hold back and chill here? Now, one of the reasons why I think a lot of this is happening is also to do with the second half of June. If you're not aware, over the last 70 years, it's really been the weakest period of the market. And the second half of June is the point where generally the market will sell off, and then we'll see an uptick into July. Notice the first half of July, it's the number one 2-week period. So you really want to own stocks during the beginning of July and technically be more a buy the dipper during the back end of June if you can do so. Could we be hitting a 50 daily moving average? That's one of the big levels we'll look at later on today's video. What about big dark pools? This is the kind of trade that obviously big Wall Street players go with each other and they actually say, I want to do a deal, and they do it off market and then report it at the end of the day or some period during it. Now you can see here there were a cluster of trades that came through on PLTR. And PLTR has absolutely been going ballistic recently to the upside. Many of you would know it's probably disconnected from a lot of fundamentals, but it is a momentum trade, and momentum trades can go further than most people think. Now, why is this important? Well, this is a 2 times levered version of PLTR, and we just saw a whole bunch of clusters, 2 retests back to that level, and then a sell-off. So this kind of tells us that at least somebody most likely sold at least a position there, and that they have started to take some profit. You can also see here that geopolitical tensions may be about to rise again, according to the latest Pentagon pizza report, which, yes, we are actually looking at now in 2025. There is an unusual amount of pizzas being ordered close to the Pentagon. Whether this is real or not, who knows? How does it work out? We don't know, but it has been synonymous with kind of geopolitical tensions rising due to all sorts of different things going on. So certainly we are watching pizza reports. It's now becoming a well-known thing, but we'll see how it ends up playing out. Hopefully it's nothing. US housing affordability. You can see here, guys, that US housing affordability hasn't been this bad since the 90s and just before the global financial crisis. And this has median home buyers now almost upwards to 40 years of age. We're at almost 39, about 38 years right now. So it means that most people buying US homes are now kind of like realistically getting closer to the back end of their careers than they are the start. And this is one of those big things that we're seeing across all of the Western world. It's become unaffordable to own homes. And of course, people are going into more debt. And that debt could be one of the problems that we really have blow over, especially through deregulation over the next couple of years. And that will be a topic we talk a little bit more about. The evolution of the Atlanta Fed GDP now versus real GDP estimates. We've already seen this be a little bit wrong this year. We had the Atlanta Fed go ballistic and say that the GDP was going to fall through a floor, literally, when it came to the tariffs. Then what happened was we, of course, got a revision of that and the GDP came in a little bit better. The way tariffs usually work is they create an initial demand. The initial demand then creates a very strong looking economy. It then kind of flatlines and then eventually supply overtakes demand as orders have come in thinking it's all going to be good, and it's not. The longer the tariffs stay, even at 10%, which is obviously a little bit more across the board, the worse it's going to get for the US long term. But of course, it takes time, upwards of even sometimes 12 to 24 months for tariffs to actually work through the system. Now, according to the Atlanta Fed, we are still looking at growth, thanks mostly to AI in terms of the US, and also this economic stimulus that's coming through because everyone's trying to get ahead of the tariff increases on some products. Pre-COVID levels, according to the latest FundStrat data here, you can see that the inflation levels, at least for now, are sitting around 2.38. And this becomes important when we consider the Fed's next move. Will the Fed cut, as Trump wants, or will the Fed just kind of sit there and do nothing? Well, according to the latest data, the chances of a cut right now are pretty slim. But the chances of a cut here later on this year are going to increase quite a lot. And most people believe there is upwards of somewhere around a 15% July cut right now and 75% cut rate in September. So it does seem likely that the next move by the Fed is going to be a cut, but it's unlikely to happen this meeting. It's really going to be more about the press conference after the report from the Fed, and then we'll have a bit of an idea on what the Fed's planning on doing next. In our previous video, we discussed the idea that maybe treasuries will get QE at some point as well, and that could lead into a big buy-up. So there are a few things happening in the bonds market, and maybe that's all going to be around that September period. We'll have to find out. FMS, most underweight in the US dollar. Recently, we've had a bit of a flight from US equities. We've seen a lot of world money start to flee and push out, and that's kind of starting to move at a little bit more of an accelerated rate. US dollar is obviously not in super demand right now, but anyone that thinks the US dollar is over, generally it takes a very long time. So remember, while we've been negative on the US dollar since January this year, we aren't negative on it because everybody's fleeing from it like this. We're just seeing it as the normal period of the cycle. So what that basically means is usually this is the time more for international markets. We've seen people go into obviously China, India, Europe as well. Even emerging markets are starting to fly a little bit more, and we are just seeing money flow around the world, which is not the different. It's a bit different to what it has been, which has just been US exceptionalism for the last 10 plus years. US economic financial outlook, according to the latest Goldman Sachs survey, and they're pretty bullish generally in the markets. They actually believe that jobs numbers are going to get a lot worse in Q3. So just remember, if they expect something, it isn't a surprise. It's when a number is different to what they expect. So they're actually saying that jobs growth is going to slow. It's still going to be growing, but it's going to be a lot slower. Now, if we keep seeing slower growth like this, then a rolling 12-month will actually be quite low. And a rolling 12-month job creation at a really low rate, that starts to call recession signs. And I know everybody is saying 17% chance of recession, but let's be real. They go from 65% chance of recession to 17% chance of recession in 1 month. It's ridiculous. So you never really read into that. The key here is going to be the jobs numbers. If they sustain and run on a 12-month roll where they look negative. And I'm, kind of looking at that number, and we'll be paying a lot of attention to that one. So the latest economic outlook doesn't look too good. What are some of the gains that the market could look at? Well, of course, AI leading to jobs literally being...
Tesla faces significant challenges. Wells Fargo has issued a sell rating, citing weak delivery forecasts and negative cash flow. Additionally, production halts for the Cybertruck and Model Y raise concerns amid ongoing demand issues. However, the removal of a proposed electric vehicle fee by Senate Republicans may provide some relief. Meta Platforms is attempting to attract OpenAI employees with signing bonuses of up to $100 million. As it seeks to bolster its AI team, CEO Mark Zuckerberg's frustration with Meta's AI progress has led to significant investments in top talent. This comes despite delays in releasing its latest AI model due to capability concerns. Coca-Cola Company reported a 5% increase in adjusted earnings per share to 77 cents. This surpassed expectations. Organic revenues rose 6% year over year, showcasing resilience despite industry challenges.